welcome. You're listening to The Best of Investing on Talk 910, the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And here's a bulletin announcement. Please note, we are moving to noon on Saturdays starting October 4th.
Nice.
Next week. So catch us at noon instead of our usual 1 p.m.
Now I got to wake up early.
Yeah, that's right. Exactly. Okay, I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing mortgage investment firm, and Rob Spinoza of RPM Mortgage. Now, our phone number, that's going to stay the same, 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations. I didn't even need to take off my shoes and socks to figure that one out. The vacations are not sponsored by the radio station, but by the Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. And the vacations are free. The early request is a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouseresortandmarina.com. You can reach them at 916-777-5511. Today's trivia theme is the TV show 2.5 Men.
Ooh.
Oh,
right.
wow.
Thanks,
You don't watch TV
I don't
much.
watch enough TV.
Boy, that means you're probably one of those little, intellectual guys. So watching TV
Mensa
here.
candidate.
Yeah.
What does that mean?
Yeah, exactly. Okay, our website is investinvesting.com. Check us out on Facebook, YouTube, TV, and wherever else we're at. Okay, Mark, you got some exciting information for us.
Well, exciting is relevant. So,
This
well,
is-
you know,
this is- we've got to make good radio, so of course it's exciting.
that's,
Right.
well, it's really exciting. So, you know, in terms of real estate news, you know, it's been an interesting summer. You know, uneventful.
A lot of
for the
talk
most
on the
part.
street though about things.
Yeah, absolutely. And
Yeah.
we'll talk about the street talk in a minute here. But, you know, uneventful. And what I mean by that is, you know, June, July, August, now the September, you know, numbers are coming into play. But, you know, markets basically been pretty, you know, consistent and steady and
Flat? Or-
flat basically. Yeah,
I
flat in terms
think-
of pricing,
Yeah.
flat in terms of volume. You know, year over year, we're still up. In fact, you know, the median price index is up about 10% year over year. So the rate of increase is slowing down. Everyone pretty much expected the market to slow down a bit, but it in fact has done that. But what I want to talk about is maybe a more interesting thing. It's not so much what the pundits think and predict are going to happen, but what does the public think is going to happen? And so here's an interesting headline I saw today. Half of Americans expect home prices to continue growing. What is the other half?
Yeah, right.
You think is this a red state, blue state kind of thing? You know, half think it's going to go up and half think it's going to go down? No, actually, 53% of Americans believe home prices will continue to gain, while only 8%
Okay.
expect home prices to slip. Now that
No.
means there's 40% in there who's going, oh, I don't know.
Well, wait, I've got an important
I'm
question
going
for
to
you.
call a lifeline. Yeah, it's interesting because what you have going on there, I've talked about this on the show when I've been on before, is how infectious home value is to people's sentiment about what's going to happen. So if you're some of those owners right now, I mean, you've got a vested interest in that, you know, continuing to go up.
Absolutely.
Yeah.
Consumer sentiment might be more important than
Right.
any other opinion,
Yeah.
graphical chart, predictions from the so-called experts in the real estate community.
Absolutely.
It's like
you know,
the stock market. People think it's going to go down,
that's-
it'll go down. But I have a very
that's
important question
exactly
for
right.
you. What is a pundit? I've heard that term. I never know exactly what a pundit is.
One of those guys that kicks the ball from the after the fourth
Yes.
down when they haven't gotten
Oh,
enough.
yes, the
There's
pundit.
got to be a Latin etymological
It's a
root
football
in there
term.
somewhere, right?
Yeah, when in doubt, pundit.
So that actually gives me a lot of confidence that you know, more than half of Americans believe that real estate prices are going to continue to go up, because that's a good barometer of it, like we just said, consumer sentiment.
And that's America too. That's not. I mean, we tend to be isolated here in the Bay Area. We
Mhm.
tend to think about our 9-county Bay Area and say, oh, you know, there's a lot of buyer interest. There's a pent up demand still, but that is nationwide, and I find that's pretty startling.
Now, here's one more piece of the article that I thought was good, is that men's feelings towards this have been even higher than women's. Women's feelings were the exact opposite. Apparently, they actually feel like things are, getting worse, which I'm talking about my wife, the kind of glass half empty
It's
kind of
the
thing.
Eeyore strain.
Yeah, so.
It'll never get better. I just know it.
I'm just for the record, I'm getting out of this
Yeah,
argument.
exactly.
I have
I'm
nothing.
saying-
I have nothing to gain.
Exactly. Well, it's interesting because I wonder how this is going to change. The stock market a couple of days ago dropped 264 points.
Right.
And, that kind of shakes things up a little bit.
Well, I was happy about that because the bond market was the benefactor of that, and rates, mortgage rates anyway, improved. And we saw last week, not this past week, but the week before, was pretty tough on rates. We saw things retreat a little bit, rates get a little bit higher, and just this week it's been largely in the green, meaning better for us.
Flight to safety.
Yes, exactly, exactly.
And just where is that safety, by the way? That's the other thing, is that there really isn't any indication on the horizon that interest rates are going to increase. And if interest rates don't go up, that means savings rates are not going to go
Right.
up, which means bond rates are not likely to improve dramatically. And so if you're nervous about the stock market, what exactly is out there for people, the growing, the swelling ranks of the baby boomers, so what are they going to do?
What
What is a person to do
Yes.
that
Well,
has money to invest and is looking for high yield? Well, listeners to the show will know that we've talked a lot about that over the past years, that there is in this this gaining momentum in the real estate marketplace. A lot of that has been supported by private capital.
Yeah.
And at Pacific Private Money, where we originate privately funded loans to real estate investors and consumers, we've been providing returns of 8% or more consistently year in and year out to people who have funded those loans since 2008, where we've funded over 750 loans, totaling over 175 million. So just to have a quick point of interest to people who are a little bit nervous about the stock market, if you've not considered trust deeds or a mortgage pool fund, our mortgage pool fund is paying 8.2 right now on a monthly basis and 8.5 on a compounded basis. So it's a great alternative, a great way to diversify your savings if you're looking for a way to boost the yield you earn on your.
Here's a point. It's kind of interesting. There are funds out there that a lot of people listening to the show might be thinking, 8%, it's too risky.
Right.
But the funny thing is, there's actually funds out there that pay higher.
Right.
However, those funds take a little bit more risk, and they'll have a little bit more loss reserves and stuff like that. Mark's been doing this for a number of years. You've done how many loans now? It's like 700.
Over 700, 750 loans.
And how many loans have gone into default enough to where you'd say it's not just late, but like default?
It's less than 1%. The rate is ridiculously low right now. I mean, real estate secured loans at a conservative loan to value. I'm not talking about 80, 90% or 100%
you don't do those
financing. Yeah, 70% or better. But Edward, you and I were at a Keiretsu Forum event yesterday, and it's interesting. We're sitting in a room full of people who are accredited investors, and which basically means they've got lots of money. And they're sitting there listening to presentations from 5 companies that, this was held at a wonderful mansion in Tiburon yesterday, and that we went there and listened to some pitches. And here are companies, these are growing tech companies that are looking for financing. Some of them are looking for like B-series funding, and and they got these charts and graphs saying if you buy in now at 45 cents a share, our exit strategy in 2020 is 30 to 38, and you'll
Because
return on your money.
And it always is this exit strategy that we're going to get bought out by a bigger company,
right? By Google or somebody like that. And it's in the moment when you're watching that and you're listening to the guy do the presentation, it sounds so compelling.
Yeah,
And oh my God, if I just had $100,000, I would totally invest in that. But most of those companies fail.
Yeah.
And
It's
all you read about is the ones that make it, but they're 1 out of 10,000, if not worse.
and the environment has to be conducive to it, because when the music stops, everyone's been dancing until the music stops, and then it's like when the environment in that changes. I mean, we of course saw that in 2000 with the run up in tag, and then you see it in the housing market. So it's just you can make those pitches in an environment where there's a lot of belief that things will keep on rolling.
Well, and some of the products that were being pitched were kind of interesting. Some
Right.
I've been
Very
one of these.
interesting.
Some of these I've been to, and I look and I say I would never even think about this.
Right.
But a couple of them were kind of interesting, very medical oriented,
Right.
with hearts and cancer and stuff and all that kind of stuff. And you could see where they probably have a good product, but you keep wondering why do they keep going back to the to the well. You know, because if this is like their second or third tranche of a
Well, they all have a
round
high
founding.
burn rate on those companies,
Yeah.
and so
So what's to stop
they
it?
needs a lot of capital. And so if you're lucky enough to make the right decision, and even the guys that the angel investors that you read about, the names that we all know, that have made billions of dollars from their plays on certain companies like Facebook or Twitter, but you don't read about all the money
Right,
they
all the
lost
others, yeah.
on the 99 other investments.
Well, you know the TV show Shark Tank.
Yeah, it's a great show.
I love the show.
Yeah.
But you know what? They always talk about either the people who got a deal and how much better it was because of all the exposure and all that,
Right.
or the people who didn't get a deal and yet it's still all this great stuff like I didn't get a deal with the Sharks, but because I was on the show, such and
Got
such.
it.
But only one time did I hear that they got a little bit behind the scenes and they asked, and they only said that there was like one specific one that
Wow.
went belly up like in 6 weeks after they did it.
After they
the money-
supported it.
After they
Yeah,
supported it,
yeah.
and you know that there had to have been a lot more than that.
Right.
You know, it's
Right.
just
Right.
and I want
Well,
to
and
hear
it-
that. I want to hear the bad stories too, not just everyone making money all the time.
Those guys are pretty sharp, and a lot of that
Yeah.
will go right over my head in the moment because the show is condensed down to that.
Yeah.
Okay. So,
exactly, yeah.
but I still think a lot of times, what do they know behind the scenes? So that whole show has got to have a really
Well, and they've got to have a lot of due diligence.
Yeah,
I mean, you
of
can
course.
imagine when they say, "Okay, we've got a deal," that they actually write a
Right.
check 2 days later. Because
right.
they got to verify that the books are real and all that.
Yeah.
Tell you what, we're going to cut to our first commercial break here.
We figured them out.
Yeah, I want to talk to Kevin O'Leary and Mark Cuban. Okay, Lori Guinier, she's a cutie.
Yeah.
Okay, today's trivia theme again is the TV show 2.5 Men. All right, what is the last name of the series characters Charlie, Alan, and Jake? So what's their last name? And it's not Charlie Sheen, because Sheen is his real name.
It really is 2.5 Men here because it's you two guys, and I'm not contributing anything to this argument.
Well, if you don't watch the TV show, and it's funny because I watch it once in a while,
Yeah.
and whether it's with Ashton Kutcher or Charlie Sheen. This is going to be the older one. Okay, so Charlie, Alan, and Jake on the TV show. What is their last name? All right, the first 3 callers with the correct answer on a free 3-day 2-night stay at the Lighthouse Resort. Let's see, call 888-912-1190 to answer this question. What is the last name of the series characters Charlie, Alan, and Jake on the TV show 2.5 Men? And don't touch that dial because the best of investing will be right back. What TV shows can I?
Yeah,
Do for you next time.
I'm a blank slate on TV shows. I mean,
What do you watch?
I don't really watch much TV. I used to. I like Pawn Stars. I'll tell you what. I like that show a lot.
Yeah.
And my wife has forgotten to undo the DVR recording of those.
So
So,
you got
Oh.
37.
so there's like 1,000 of them on there. But I can only watch them when my son is like kind of out of it and doesn't want to be watching his show. So, and,
Well, how old is he now? He's only like
he's 2.
He's 2.
Yeah.
He's like, Daddy, I don't like you with the Pawn Stars.
Yeah, and Pawn Stars is a great show though
It
because
is.
those guys are really savvy and,
Yeah.
and but their techniques are very crude. Obviously, from pawn business, what they'll do, someone will come in and they'll be like, they know that guitar is worth $8,000. It's like,
Yeah.
I'll give you $1,500.
Yeah.
You're going to work back to 4. But it's
Yeah.
You know what's another one is pornography.
I haven't seen that one. No.
It's basically a game show where they have the guys from Pawn Stars on it, and it's really
Oh, okay.
Yeah, it's really good.
Yeah, the thing about that too that I find, fun to watch is it really is true. You don't know what people are going to bring in. You just don't know. I like the history of it.
Yeah,
Like,
that's
they
what
bring
I
in the
like. I like
experts and
history.
stuff.
Yeah, because some of the stuff you kind of wonder why is someone bringing this into a pawn shop?
Yeah,
But the guy I don't really care for is the guy who's the sports Jeremy.
I haven't seen that. Yeah.
He
You mean when they bring in sports memorabilia?
Yeah, they
Okay.
bring that expert. He really doesn't know that much. He was talking about how, it was because of Cy Young, because someone had a Cy Young card.
Yeah,
Because of Cy
yeah.
Young that they moved the pitcher's mound back. It's like, no, they
yeah.
moved it back before Cy Young. They knew that one.
The guy that's I like a few of the guys, but the guy that comes in with the hat.
The bandana.
The car guy.
Yeah,
he's great.
He's
Yeah,
great.
he's
Danny.
Danny.
Yeah, he's great. I like him.
That guy is just genuinely cool.
Yeah,
it's
he's a
like
cool guy.
You know what, brother? I really like the car.
That's good. Is that on tape? That was good. Do that again. Yeah, brother. Did you get that?
No.
What?
Ah!
Oh,
Gotta get the outtakes.
Okay, we're talking Pawn Stars here.
I was sleeping.
We're doing a road show here.
Okay, go.
Talking Pawn Stars, and there's a guy named Danny who's brought in as an expert to talk about cars. And he's got a bandana. He's just a cool guy, and here he is.
You know what, brother? I really like the car, but I gotta tell you, I don't think it's worth it.
It's that's pretty good. That is a good imitation.
All right.
Value just isn't there, brother.
All right. Throw in a couple little emails here too.
So we can start if you want to
Yeah,
start
go
in
ahead.
with we can talk.
Yeah.
I can start by the article I read in the paper
Okay.
featuring our which mentioned two companies, including RPM Mortgage and Alamo. Jump into the latest product.
Okay, there you go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hoff of Pacific Private Money and Rob Spinoza of RPM Mortgage, and Kramer there on the camera.
Absolutely.
When we cut to the first commercial break, we asked this trivia question: what is the name of the series characters Charlie, Alan, and Jake on the TV show 2.5 Men?
So I gotta admit, I wasn't a 2.5 Men fan.
Oh
so I
gosh,
don't
this is
know
gonna
what-
be tough then. Okay, Harper's name. Okay, and before we get into Mark, again, one quick thing here.
Sure.
We do have another special trivia contest for next week, overnight stay at the Meritage in Napa. And here are the rules. Can't have any previous winners of contests. You need to email edward@bestofinvesting.com the answer to the question by midnight tonight. And from the correct answers, we will read them. We will pick randomly the winner and announce it next week. So here's their promotion here. You deserve it. How about a romantic getaway right here in Napa Valley? The Meritage Resort and Spa boasts world-class luxury. Enjoy award-winning cuisine. Relax in the estate cave as you pamper yourself at Spa Terra, or savor flights of Trinitaris Cellars wine. Or Trinitas, excuse me. I pronounced that wrong. Meet your friends in Crush Ultra Lounge with 6 bowling lanes. I'm there, baby. And sports entertainment. Make reservations now for special winemaker dinners, the holidays, and masters makers at Meritage. Visit meritageresort.com for details. Fun place. Go on their website. Check them out. Really nice. Mark, there was another article you had that was kind of interesting.
Well, mortgage refis.
I'm sorry.
Oh, you haven't done the.
I didn't do the question.
What's the
Okay.
special question?
Special
Okay.
question.
All
Okay. I apologize. Okay, here's the
Can't be a
special
winner if
question.
you don't know what the
Yeah,
contest
that's
is.
right. Almost 1/3 of adults use at least 2 of these each morning. What? Okay, so answer that question for next week. All right, go ahead.
So, this year, 2014, was the passage of kind of the final regulatory layer from Dodd-Frank of new mortgage restrictions to, all in the guise of preventing predatory lending and preventing another repeat of the financial meltdown from 2008. And as listeners have heard us talk about on this show all year long, is basically refinances have come and gone because we really the
Pull it shrunk, yeah.
right, the pool has shrunk. Everyone who could refinance has pretty much refinanced. Those
Right.
3% rates have gone up to 4 and now 4.5-ish, and sometimes higher depending on your situation. And so the banks finally are starting to look around and going, okay, well, we need to make some money here. And so what's happened is that we were waiting for the banks to come back out with some new products designed to kind of dance around the Dodd-Frank regulations, keeping with the spirit of it, but opening the doors to a few more borrowers. And
Right.
there was a article in the Sunday paper, Chronicle, that talked about 2 fresh ideas from 2 mortgage companies, including RPM Mortgage. Our own Rob Spinoza from
there you go.
RPM Mortgage obviously
press,
knew
yeah.
about these these in advance of this announcement. I was pleasantly surprised to read the article. But Rob, why don't you go ahead and tell us a little bit about these new products?
So this suite of programs, we could call it a jumbo program, but actually the loan amounts will go down to $250K. The intent of these programs is to bring into the picture those who have been shut out of the ability to refinance or to purchase a home
Mm.
because their scenario doesn't fit in the narrow QM box that has been created.
QM being the new
Qualified
qualified
mortgage.
mortgage regulations that Dodd-Frank has.
Right. So the first question people ask is, "Oh, great, stated," or they'll say, "Are stated income loans back?" The answer is no, they're not.
Not quite.
Not quite. But what we've done at RPM is we've tried to take a program that looks at the borrower's complete scenario, including assets, including the equity in their home, including their self-employed employment history, things of that nature, and make a program that's catered to them. And what it does, it addresses Dodd-Frank's core provision of ability to repay. So we are doing the ability to repay component based on different criteria, but we are not making a stated income loan that has not demonstrated an ability to repay
So
the loan.
you're not infringing on Mark's territory, are you?
No, we're not actually. We're somewhere. That's a good question.
We're not hard money lenders
We're not.
yet.
No, we're somewhere in between. And where these programs will be especially effective, I'll give you an example. Let's say you're a self-employed borrower. You had a very good 2013 as the economy improved, but your 2012 didn't look so great, and you were unable to buy a home because when the lender averaged your income,
Yeah.
you were shut out.
Happens a
Well,
lot.
now, right, we have a program in that suite called the Sneak Peek Loan, and it will look at only 1 year of tax returns, your most recent year, and will go off of that average. So that can bring a lot of borrowers back into the mix.
I wonder how many people are gonna falsely file tax returns and pay more taxes, because you guys do check to make sure it's the same tax return.
Yes, we
Just
run
in order to get a loan.
a 4506T, the request for transcript of taxes, but all that aside, I don't know what people do with their taxes once the loan is done. But what I can tell you too is this suite of programs also addresses things like we hear it here in Marin all the time. I've got a $2 million house and all I want is a $300,000 loan and they won't make it for me. Why not? Well, because previously you could, even though you had all that equity, you still did not demonstrate ability to repay. These programs will allow us to view that differently now. In addition to those who have substantial assets.
Because you still can't just look at the equity in the house.
Right, exactly. We're going to be using different methods to qualify income and bring other things into the picture. That is how it works.
So there's a little bit of background. The Dodd-Frank regulations created this idea of a qualified mortgage. And
Right.
a qualified mortgage is essentially a mortgage that doesn't contain certain features. So what
Yeah.
they've done is they've essentially said you can't have features such as interest-only
Right.
payments, you can't have negative amortization,
Right.
you can't have balloon payments,
Terms longer than
or
30
terms
years.
longer than 30 years. And then last but not least, the borrower's debt payments, including mortgage and other debts, cannot exceed 43% of their monthly pre-tax income.
Yeah, but
So
if
we
you-
call it a DTI
but
ratio,
if you-
debt to income of 43%. So all of those combined define this thing called a qualified mortgage. Now, if you fall within this qualified mortgage, the resale market has
Exists.
come
Yeah,
back
right,
and
right,
exists
right.
for a bank to make that loan and sell it. Outside of that qualified mortgage, they can't sell the loan, and therefore, so-called non-qualified mortgages, they're really, or subprime, which is what we used to call it,
Right.
doesn't really exist and hasn't existed for most of 2014. It's been the realm of the private money or
Right.
hard money lenders. And so now what's happened with RPM, and correct me if I'm wrong, is that now you can look at DTI ratios higher than
Yes,
43% because you have a source to sell your loans to that isn't a
Government-sponsored
government-sponsored
right.
entity. That's
right.
exactly
Well, the
right.
funny thing is, with the qualified mortgage, if you're making someone pay more than interest only,
Right.
the cash flow kind of hurts the ability to qualify anyway.
You want to know the really funny thing about this is that our company went through great lengths to introduce these programs. And some of them will allow debt ratios as high as 60 and 70% if the
Go get 'em.
yeah, okay. but what's really interesting is that most of them will stop at about 50. But the government-sponsored entity loans, Fannie Mae, Freddie Mac, FHA, will routinely go above 43% because they are exempt from the qualified mortgage, provisions outlined by Dodd-Frank
Of
because
course, they are, because they're government pay.
And is that take-home pay?
it's gross. Gross.
Yeah.
Yeah, it's not net.
So you know what? I know how you make it higher. Just lower your tax. Government should lower the tax rates.
So there's a number of components to this, but it's a great step in the right direction. One of the other things, Mark, Mark pointed out a lot of the provisions of a qualified mortgage, but at the end of the day, what it really is getting at is, does the lender have either safe harbor or what they call rebuttable presumption? So does that mean that the consumer can level a defense against the lender for any reason? And if you're outside of QM, the answer is yes, they can. So we have to be very careful in making loans to people that we have protected our interest and our investors. And this approach to underwriting these loans for this quality of borrower and this type of borrower is aimed at doing just
But
that.
there are no attorneys who would take that on, though, and try to protect against the evil banks, would they?
Right, so the government has essentially decided what a predatory loan looks like and what it doesn't look like.
Right.
And unfortunately, and I say unfortunate because I think what they did is eliminated a lot of consumer choice
They did.
in their zeal to
We're pro-choice here.
Right,
We
we're
are.
very pro-choice. In their zeal to eliminate predatory lending. So now an interest-only, a loan with interest-only payments is considered predatory and is not considered a qualified mortgage. Well, there's a lot of reasons why a borrower would want a loan with interest-only payments,
Right.
especially if they expect certain changes in their income, or if they're not going to stay in the home that long and they're not, or just there's just a lot of again the consumer choice thing is just it's really unfortunate that a lot of these
They're
features
doing it
have
for
been-
their own good, though.
Yes, yes.
You know, I remember watching the State of the Union address in 2009, 2010, and one of the guys that the president pointed out in the audience was a self-employed individual, and he was talking about how these guys are the lifeblood of the country and whatever. And I'm thinking to myself, yeah, but he can't get a mortgage.
Yeah.
That's the big problem,
You know, and that really hasn't, well, I'm not going to say that hasn't changed. You know, you have to attempt, if you're self-employed, you've got to make the effort. I'd be the last guy to tell you can't get a loan. You got to work with the right people and you got to get down to basics with it. But still, it is a lot harder for the self-employed. It's a lot harder for the retired borrower.
Yeah.
It's a lot harder for the people who have a lot of assets but not conventional income to borrow. And these programs are aimed at helping them out and getting them into a program that'll work.
Okay.
Yeah.
All right, fair enough. When we come back, we're going to get into some very interesting emails for our co-hosts here.
We got some great listeners.
Yeah, we sure do. Okay, here is, again, the trivia theme is 2.5 Men. Here's the second trivia question. What is Alan's profession? Okay, you know that one? Yeah, you back in. Hey,
I'm gonna Google it.
Even that
Crickets.
one. Even that one I know. Okay, the first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. On the TV show 2.5 Men, what is Alan's profession? One more time, 888-912-1190. Make sure to include your name and your email address. Speak slowly, not like I am doing now. And email one letter at a time. That's what we need. Okay, and don't touch that dial because the best of investing will be right back.
Alan Harper, 2.5 Men. Slowly.
No cheating, no cheating. Mr. Quamer.
I like Seinfeld.
I know, me too.
And Seinfeld.
I had some
nuts.
Seinfeld stuff.
Oh,
Okay, so
I have
what?
an occupation.
What? There's something always in every Seinfeld episode that's small. That is pretty noticeable. Well, it's kind of hidden because it's small. But there's one
Every
thing in every
episode.
episode of Seinfeld that'll
And they
show
just
up.
sometime during the episode.
Yeah. It's kind of a hard question to ask, but I'll just tell you. Little Superman. He's got that
Oh, that's neat. I love when shows insist stuff, dude.
You gotta find a little Superman.
Yeah,
You mean
Where's Waldo?
the one on the man?
Yeah,
Oh, yeah.
yeah. They basically said, like, who always shows up in there? Well, Jerry's always in every episode. I mean, all four of them always show up in every episode. I didn't understand how they first asked that question. All right. Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money, and Rob Spinoza of RPM Mortgage. When we cut to the second commercial break, we asked this trivia question about the TV show 2.5 Men. What is Alan's profession?
I looked it up on Google.
And what'd you find?
chiropractor.
That is correct. Mark, you are so smart. Okay, we got a couple of interesting emails here. Mark, email for you says, how am I allowed to invest my IRA in your fund?
How are they allowed to invest their IRA? Well, so at Pacific Private Money, we have a mortgage pool fund, and we also do individual trust deed investments. A trust deed is also another name for a note secured by real estate or a loan secured by real estate. The security is a recorded deed of trust. In California, they call them deeds of trust. They don't call them mortgages, but for ease of definition here,
Yeah.
basically, investing in a mortgage is how we make money at Pacific Private Money, and how we generate yields of 8% or more for our private individual investors. We have over 200 investors, most of them Bay Area residents who've been enjoying 8% and higher yields on their savings and IRA accounts since 2008 when we first opened our doors. So, how do you invest through your IRA? Well, you need to have what's called a self-directed IRA in order to invest in asset classes outside of traditional investments like stocks, bonds, CDs, and mutual funds. Those are all considered traditional investments. They're all liquid. They can be bought and sold easily.
Is there an SEC requirement? Is that how, does that play into that?
No, it has to do with being a trust administrator.
Okay.
Right. So a lot of people have IRAs and retirement accounts that are held by the main brokerage houses like Fidelity, Merrill Lynch, Charles Schwab. And if you have your IRA account with them, some of them have names that sound like self-directed or there's self-direction allowed, but it's not a true self-directed IRA account. It's misleading in a way. What it means is you get to choose which stocks and mutual funds that you're invested in, but you really can't choose outside that. You typically buy gold, you can't typically buy real estate, you can't typically invest in mortgages. So for that, you need to have what's called a self-directed IRA. And to open a self-directed IRA, you have to go to one of the 5 or 6 major, I think there's actually more than, there's probably a good dozen or so throughout the country, but I know of, within California here, there are about a half a dozen very well-known and well-respected IRA custodians. These are bank-like entities that you can open up an IRA account, and most of them will be able to handle any type of IRA.
Yeah, you can invest in real estate or in mortgages. In fact, our favorite is IRA Services out of San Carlos.
Right, so for example, so one of the number one IRA custodians in California is IRA Services based in the Bay Area, and they have a number of different IRA programs that you can you could either roll your money into one of their IRAs, an existing IRA into one of theirs, or you can open up a new IRA. A lot of people have multiple IRAs. I know it's funny how many people don't realize that you can have multiple IRAs. You can have Roth IRAs, you can have traditional IRAs. A Roth, you put after-tax money in, but it grows, and theoretically you'll never be taxed on it. And of course, the traditional IRA, you get tax deferral for the money you put in. But
or sometimes what happens is, you open up a Merrill Lynch account, and all you can invest in are Merrill Lynch funds.
Right, that's exactly right.
You open up a Fidelity account, they go, well, wait a minute, but I wanted to invest in Merrill Lynch funds.
Right.
So you've got this IRA, and you're nervous about the returns. You're maybe nervous about the stock market. You want to know how you can boost the yield that you earn overall in your overall retirement savings plan. And one of the ways that many people are doing that now over the last several years is by opening up a true self-directed IRA account with a company like IRA Services, funding that money either with normal savings, income, rolling over other IRA accounts, converting them into that. And then once that cash is in there, you can buy real estate, you can invest in mortgages, you can invest in a mortgage pool fund. There's actually very few things that you can't. In fact, what they do is there's not a list of what you can invest in when it comes to an IRA. There's a list of things that you cannot invest in. It's a short list. So, and we won't get into that now because that's probably another show. But anyway, if you were looking at boosting the yield that you earn on your savings, and you want to consider alternative investments like mortgages and mortgage pool funds, you need to open up a self-directed IRA in order to do that. Once that happens, it's really easy. It's like a 4-page form for an investment authorization. We have, in fact, about 25% of our mortgage pool fund is from is IRA accounts.
Well, I can understand that because especially when you can reinvest your
Right.
monthly dividends, that distributions that Pacific Private Money Fund pays, and if the yield's close to 8.5%, you get that compounded rate of return.
Yeah.
There aren't too many investments that, and when you have it in a retirement account, the compounding effect is so
Right.
important, to especially
It
not
is.
paying taxes on
It
it.
is,
with
and-
the taxes, right?
And in fact, really, the moral of the story is that the reason that the self-directed IRA industry even exists is to allow people to invest outside of traditional stocks and bonds. That's really why it was created.
So, Mark, if an investor they obtain a self-directed IRA, they invest in a note with you, and then that the property is sold or that ends, what happens then for the investor? Are they going to reinvest with you?
Typically, they do. So,
Yeah.
so in other words, you can invest in a mortgage, and the mortgage might get paid off in a year or less.
Right.
It goes back to cash into your IRA, and then
Okay.
you can turn around and reinvest that again. So people who have self-directed IRAs are typically actively investing those dollars in there. But I tell you that active investment is worth it because you really can earn close to double-digit annual yields through real
Right.
estate and real estate-related products, investing through your self-directed IRA. So for more information about this, do give us a call. We can be reached at 415-883-2150. That's Pacific Private Money, 415-883-2150. Or go to our website for more information, pacificmoneyfund.com. That has information about our products, pacificmoneyfund.com.
Okay, then we're going to ask Rob his email question here. When we come back, I want to find out what deals you got working on there because that's always exciting, deal of the week. So Rob, here's one from a listener. My lender ran my credit and there are some items I need to have fixed. Can I get my report rescored?
Yes, you can do that. It's called a rapid rescore. A lot of lenders really promote this as being a solution, the be-all, end-all. But it's tricky, and I'll tell you why. So let's say you've got a credit report. You run it, and you come up with a 718 FICO, and your debt-to-income ratio is a little on the high side. We just got done talking about Dodd-Frank, and let's say you fall outside of 43, and that matters in your case here. So what are you going to do? If we look at that credit report now, we can often tell that by paying down a credit card balance or something like that, lowering the monthly payment on a credit card balance and reducing the balance to limit, which can comprise 30% of your overall FICO score, that might make the difference between an approval and a denial on your loan. So what do? Well, if you paid off the card, you could wait for it to just pick up naturally, and of course you can't use the card again until that happens. But often that's not a pragmatic solution in a real estate environment because you're in escrow, or you're going to be in escrow, and you don't know what the timing on that will be. So lenders resort to rescores. The problem with rescores is, well, there are two problems. One is they're expensive, and so usually you will get charged, our reseller will charge per trade line, per bureau, per borrower, okay?
What is that total?
So let's take an example, $75 per trade line. So now if you've got a joint credit card like we talked about and you want to pay it off, okay, and it reports on Experian, Equifax, and TransUnion, you've got 333, okay, 225, and you've got that 3 times, right? So what is that, 675?
Yep.
And then you got that for 2 borrowers, 1350.
Wait, I got to take my shoes and socks off.
Yeah, right. Now this is what you're gonna have to. So that's
Wow.
that's $1,350. But here's the kicker: the borrower cannot directly or indirectly pay for that.
So who pays for that? Ubers.
The lender.
Lender. There
Lender,
you go.
right. But this is where it gets interesting because yesteryear, someone like myself would have looked at that and said, "Hey, we've got the difference between an approval and a denial. Do you want to do this?" The customer more than likely would say, "Yes, I want a higher score, I want a lower debt ratio, and I want to buy the house." But I don't have the ability in many cases to do that because remember, Dodd-Frank now has a comp reg or a compensation regulation component of it for your loan officer that says before your deal even came in, he needs to be paid a certain percentage of the loan amount, whether he generates that revenue or not in the loan. So if you're going to take a smaller loan amount, for example, and you're going to handcuff it with $1,350,
Yeah.
now the lender may not be at his leisure to help you get the loan.
Oh.
So rescores, you've got to be, you've got to work with your lender on them. You've got to assess what would work and what would. You have to consult your credit reseller. You have to, in other words, you've got to be very careful about how you go about a rescore. Not every lender is going to be amenable to it because remember, they could lose the money and not close the loan for whatever reason. The property could fall out of escrow,
Supers.
and you're stuck with the tab. So it's another thing that we look at as it's a useful tool. We want to help the borrower, but we have to do it within regulation that often is not cooperating towards that end.
Okay, so this is just one of many types of questions that I'm sure
Yes,
listeners
yeah.
have about mortgages. So
Listeners
they
do have questions
this
about
one specifically, or they have other ones, which you're the man. when
For
it comes to
credit, yeah,
this.
no, we do credit rescores, and we can make things happen with that and improve things. So if you have any questions, give me a ring, 415-367-5959. I work out of the RPM office in Mill Valley, and my bio is on the Best of Investing website, so if you need email, phone, anything else, it's all there.
All right,
Yeah.
thank you so much. We're going to cut to our third and final commercial break when we come back. As I said, I want to ask Mark about the deal of the week. I know he's got some exciting deals out there. Okay, on the TV show 2.5 Men, Alan's wife threw him out of the house and filed for divorce. What is Alan's wife's first name? All right. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Alan's wife threw him out of the house and filed for divorce. What is Alan's wife's name? All right. Don't touch that dial. The Best of Investing will be right back with our final segment.
What was Sheen's character's name?
Charlie?
It was Charlie?
Yeah.
Oh, okay. What's Charlie's last name?
Harper.
Charlie was Harper, and so his brother is.
It's also Harper.
Oh, okay. Yeah, I know. So his brother's the one that you're asking the question about.
Yeah, the one who's the chiropractor.
Chiropractor.
Yeah, so the chiropractor's wife. That's what
Who divorced him? See, I don't know any of this stuff.
It's actually a pretty good show. I've enjoyed it. You don't watch it?
I don't like it at all.
You don't like it?
The one show I watched actually was where he had died, and it was the one where they were going to introduce the new one.
And that's what I
as
didn't
soon as
see.
the woman in the church crying said something about making tea with her panties, I thought, oh, that's the kind of humor that this show has. Okay,
Oh.
I don't need that. That's just gross.
And he's gross, in my opinion.
Which one, Charlie?
Yeah.
Yeah, Charlie Sheen, yeah.
Now, Senior's a good guy, I think.
Oh, really? Martin Sheen?
Yeah, I like him.
I do. I like Martin. Charlie looks.
I like the movie Wall Street.
Charlie.
Both of them weird.
Well, he was
He's
still a
got-
good-looking
he's
guy.
got some
He
problems.
the hard living really made it
Yeah.
pretty harsh right now.
That's true. All right.
Sorry about
Spouse.
Charlie.
Yeah, he had a radio show and a sports show, and he went nuts. Yeah.
It says here he was
Gee,
married
that's good.
twice and had 2 ex-fiancées.
Wait a minute. Alan's wife?
Yeah,
Right.
Judith and Candy.
Okay. We're talking. What'd you guess?
So he was married to Judith from 1991 to 2003, and from 2006 to 2007 was Candy.
Was he married to Candy?
No,
It
he ate
says, well, it just
candy.
says spouse. I mean, it's a family tree that's on that's on Wikipedia for Alan Harper of 2.5 Men.
Jesus.
All right, here we go. I only have 5 minutes left, boys.
Okay.
Welcome back to the Best of Investing. Last time for the show, I'm Edward Brown, your host. Mark Humph and Rob Spinoza are my co-hosts. On the show, 2.5 Men is our third final trivia question. Alan's wife threw him out of the house and filed for divorce. What's Alan's wife's name?
Don't know.
Judith.
Judith.
So
wow.
you did have that right. Okay.
Okay.
So Mark,
Wikipedia had it right.
yeah, we only have a few minutes left. A couple minutes left. Give us the latest deal of the week.
Yeah, we need some intro music for that deal of the week.
The shark music, guys.
So, got a call from a client. Brand new build in Hayward. In contract. Builder's done with it. He needs
Okay.
to close.
A personal residence?
Personal residence. This is going to be an owner-occupied purchase. $930,000 is the purchase price. He's looking for, magically to me, because we love doing 70% or less financing. He's not looking for an 80% financing. He was expecting to put 30% down.
Oh, wow.
He
There
did
you
a
go.
70% loan. He makes $25,000 a month, and his credit score was really good. But during the time, the 6 months that he was in contract to build a home, he went to his mortgage broker, and the mortgage broker started working on the loan application, and something came up that was curious. He had filed for bankruptcy in 2010 and believed that he was discharged properly in 2010. Now, 4 years later,
Yeah.
4+ years later, his score had recovered,
Right.
and he was qualified for bank financing under a certain program. But they discovered that there was a certain, and I'm sorry, I don't know exactly what the piece of paperwork was that wasn't filed, but something wasn't filed, so he had to go back to his attorney and have them file this last piece of paperwork. So what happens?
Officially
30
becomes a
days,
discharge.
30 days later, his credit report shows a
Oh,
bankruptcy
wow.
discharge of 2014.
Yeah, right.
And now
right,
he
right.
qualifies for
Nothing.
zero
Yeah.
bank financing. So we got the call, and we're going to save the day, and that's one of the loans we're going to be closing next week on our owner-occupied bridge loan designed to rescue consumer transactions
great.
that have fallen apart last minute.
What
And
were the terms of the loan you charged?
so 9.9% and 2 points. So for a no prepayment penalty, as soon as he believes that in his,
He's not going to wait around for that BK to fall off.
No,
He's going to deal with it.
Right, his mortgage broker is going to help him fix that, but it's going to take a little while. Meanwhile, the builder's done with his house, and if this
Yeah.
guy doesn't close, he's not only going to lose his deposit, but
Yeah.
the builder's going to turn around and sell that house at a higher price to
Right.
somebody else, because 6 months ago when the guy made the contract to build his dream home, it was a cheap price.
So as Montgomery Burns would say, excellent, Mr. Smithers, excellent.
So
you do
this
watch
is-
The Simpsons, don't you?
This is
Okay.
what's interesting about this is that almost exactly a year ago we had an almost identical
Yeah.
situation happen
I
where
remember
we
that.
helped somebody who had an IRS lien that was wrong get filed during the time
Right.
his house was being built.
And this is the funny thing, because people will come to me and they'll say, "Look, what could possibly go wrong in the home rest?" And it's things like,
Lots of things.
it's things like that you're not thinking about that may come up. And it's like, everything we're looking at right now is great because the market here is brisk, and people want to go into contract with a minimum of contingencies. And they ask me and they say, "Look, what could go wrong?" And then you've got stories like that are
And
almost
sometimes-
unbelievable, but
Right.
they happen every day.
And in fact, those are actually fairly rare occurrences, but they do because there's millions of people in the Bay Area.
Yeah.
It does happen with frequency, but what's even more
It's a
common,
screw up, and a lender does not accommodate it.
right? And what's even more common though is sometimes speed is the issue. Sometimes
Yeah.
people make really
Yeah.
aggressive offers. It's like if you
Yeah.
don't offer a 21-day close, you're not going to get this deal. Okay, so they make it and then find out that their bank can't accommodate it. So we come in and close, and yes, it adds thousands of dollars to the cost of the house, but you just have to look at it
Not as
from a
many
broader
thousands as
perspective.
losing the contract.
Right, exactly.
So
What's more important, getting the deal or not getting the deal?
again, if people want to get, in this
Right.
case, they were getting 9.9% and 2 points on a pretty safe loan.
So if the bankruptcy pops up this week,
Yeah, exactly.
So if you know anybody who needs rescue financing, Pacific Private Money, pacificprivatemoney.com, best way to find us.
Excellent. Okay, here's our thoughts for the day. Why do we say something is out of whack? What's a whack? And
Whatever it is, we're out of it.
okay, and if you, yeah, exactly. And if you mixed vodka with orange juice and milk of magnesia, would you get a Phillips screwdriver?
Oh.
Oh, I love that one. All right, tune in next week to the Best of Investing. We're going to be having more puns. We're going to be giving
More
away
pundits.
nine more pundits. We're going to give away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
That's right.